Hey, Steve Saretsky here. As always, the King Real Estate Market Update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, I'll ask you to hit thumbs up and subscribe. Questions, comments, put those below. As you all know, people that have been following this channel, I do a weekly, macro show, Canadian macroeconomics, finance, etc. every single Saturday. As I've mentioned before, especially for the original subscribers, we will be doing a once a month deep dive on the Vancouver housing market, which is ultimately my bread and butter. So that's really what the show is going to focus on today. I want to remind you that everything I talk about in today, if you want to look at the charts and the graphs that I'm discussing, I do a monthly Saretsky report. It's an 18 to 20 page PDF every single month for free, which again really summarizes my thoughts in written word. So if you want access to that report, it is free. It's going to be in the comment. There's going to be a link in the comments below or in the description below where you can go and access that report. So I highly encourage you to check it out. But I want to start first and foremost with like a sort of macro overview of things, and then dive down into the the details and specifics of the Vancouver housing market. Obviously, you can get nitty gritty. I'm not going to talk about every single sub-market in Greater Vancouver. Even though the market is quite segmented right now, I would be sitting here for an hour talking about it. So what I want to touch on is, the macro view is that, okay, so we look at it, obviously, we had this pandemic, policymakers stimulating, trying to keep the economy afloat. So what we've seen recently is, you've got Canada's M2 money supply growth. So your monetary base, your money supply has expanded by 19% since last year. So massive increase in money supply. Basically is a debasement of the currency. So it really shouldn't be surprised that if your monetary base grows by 19%, it shouldn't necessarily surprise us that home prices, nationally went up 20% over the past year. So they've basically grown in line with the monetary base. And so I think policymakers are figuring out that, we probably overstimulated. Let's slowly try to rein that in, without necessarily tipping over the housing market, which is basically propelling the economic recovery. So what you've seen over the last 2 or 3 weeks is you've seen the Bank of Canada come out and say, hey guys, we're going to start tapering our asset purchases, our QE or our money printing program. We're going to start slowly tapering that. You've had the OSFI, which is the banking regulator, come out and say, hey, we're going to increase the mortgage stress test for uninsured mortgages, basically reducing borrowing power by about 4.5%. And then you've had the federal government in the budget say, hey, we're going to apply a 1% national foreign buyers tax. These are all designed basically to try to pull some of the stimulus out of the housing market and try to rein things in. Personally, I think a lot of these measures are not going to have significant impacts. I've talked about them in my weekly show, but obviously, as I've said before, for example, the stress test, you actually have some of the banks are actually increasing, for example, their total debt servicing ratios, basically offsetting the stress test. So, you've got all these tweaks going on. And obviously I've talked about the foreign buyers tax being really a policy measure that has no real teeth. But, without further ado, let's break that down. So you've got policymakers now obviously trying to rein in some of the stimulus, which, ultimately brings us to the Vancouver housing market, because we haven't seen that filter through to the housing market. We still got a very strong housing market here. I will say this first and foremost, it does appear to be slowing down. I don't think that should come as a surprise after having basically 9 or 10 straight months of record sales with hardly any fundamentals, that naturally the housing market is starting to slow. So we can see this first and foremost in the detached housing market, obviously still red hot. But, sales in April were, decent, certainly not record breaking. But, and we can see that, detached sales, for example, they did appear to have peaked in March. So we're down, April sales were 15% lower than March sales. And I suspect as we go into the summer months with people looking to, get out and about, getting vaccinated, going out in summer, going on these, vacations in the province and whatnot, that they're probably not going to be thinking too much about purchasing a home. So that's the one thing. So you've got that. You've got record new listings in the detached space. So that's helping increase the months of inventory for sale. If you can look at months of inventory for sale, I think we went from about 1.7 months of supply last month, which was incredibly tight. It's like record lows. So we pushed that up to 2.7 in April. Now, again, keep in mind, you still have less than 3 months of supply in the detached housing market. So obviously, it's still a tight, competitive market. So what we're seeing basically, ultimately, to sort of summarize that, is you've got a situation where it looks like we peaked in March. You're seeing fewer showings. You're seeing fewer offers. And you're seeing basically less crazy prices. Now, again, a lot of these houses, you should still go in there and expect that you're probably going to be competing in multiple offers. It's just going from as opposed to competing with 6 or 7 other people, you're competing with 1 or 2 other people, maybe 3. So that's what's happening in the detached housing segment. Now, obviously, prices are still up. They're still showing up because the MLS home price index is, again, it's a lagging indicator. I've talked about this multiple times before. So detached prices are officially up 21% on a year-over-year basis. Now, they will continue to increase. That home price index will keep going up over the next probably 2 months because, again, it's a lagging indicator, 2 to 3 months. So you'll probably see that home prices will show increases of 23, 24% on a year-over-year basis. I would argue we've probably peaked, at least for now, in terms of the home price acceleration. You're just seeing more listings coming on. You're seeing the months of inventory start to increase, which is basically, I think, slowly but surely will hopefully balance that housing market out. So we'll be keeping an eye on that. But again, overall, it's still a tight, competitive single-family housing market, but certainly showing signs of easing, which takes me to the condo market because the data that we're seeing there is a little bit different. Now, keep in mind that when I talk about the condo market as well, that this is very segmented, right? You can't compare what's happening in, the condo market in North Vancouver or, further out in the suburbs into Burnaby or, Surrey or Langley, for example, versus downtown. We know that downtown is still the most sluggish market. It still hasn't come back to life. It's getting better, but it's still not where it was. So, the condo market, though, as a whole, if you look at it holistically, you had record sales in April, obviously up 300+% comparing off weak base effects. You also had record new listings, months of inventory. Now, this is obviously what's important to everybody. As opposed to me rambling on about record sales and record new listings, is the months of inventory in the condo market is still incredibly tight, right? You only had 1.9 months of supply for sale. So sub 2 months of supply in the condo market. Obviously that implies higher prices. Obviously that makes it a competitive seller's market. Your sales to active ratio, 56%, anything over 20% they say is a seller's market. You're at 56, right? So these are really strong numbers in the condo market. And again, it shouldn't come as a surprise to see that prices now, as per the lagging indicator, are starting to show increases in home price growth. So condo prices are up 6% from last year. Not a huge move when you factor in single families up 21%. Townhouses basically in line with that. Now, again, lagging indicator, if you look at the average price per square foot, that's showing a 9% increase on a year-over-year basis. So that's kind of more in line with where things are. Again, similar to 2015, 16, it's always a single-family market that leads the market. So you can kind of watch that and say, okay, that's where the condo market's going to go. And so you're sort of seeing, right, when prices go up 20+% in the single-family and townhouse market, it becomes inevitable that some of that has to basically trickle down into the condo space. And I think that's really what you're seeing right now. So you're seeing, that momentum is actually building in the condo market. Now, we'll have to keep an eye on this because, again, I guess the condo market is not it's not that simple just again to say that they're all moving up 10%. You've got more price growth further out in the suburbs, and you've got fewer price growth inner city. So, ultimately how we kind of summarize the market here, right here, right now, is that it's an incredibly mixed bag. You've got, single family townhouse market still strong, still competitive, but clearly showing signs that it's slowing down. Again, I think that if we look back in 3-4 months, we might ultimately determine that March proved to be the top. The condo market is showing some resiliency, and I would actually argue that the data behind the condo market looks more bullish than it does in the single family and the townhouse market. So we'll continue to keep an eye on this. As I mentioned before, all these charts, graphs, detailed analysis is in the monthly Saretsky report for free. Again, that's going to be in the description below, so I highly encourage you to go check that out. But as always, we'll do a deep dive here every single month just on the Vancouver housing market. If you have any questions, comments, put those below or shoot me an email, steve@stevesaretsky.com. See you next month.